Friends, we are on chapter number 4 of account part 2, that is financial statement analysis or analysis of financial statement. Today in this lecture we are going to talk about common size statement. Earlier we have already discussed about comparative statement. Also we have done the sums based on that, sums of statement of profit and loss account and sums of balance sheet. Right now today we will see what common size statement is. So analysis of financial statement, common size statements. The analysis of financial statement can be done through this tool also. Profit and loss statement and balance sheet of 2 years or more than 2 years can be compared with the financial statement of current year with the help of this method. Under this method, the profit and loss statement of current year are compared with the profit and loss statement of the previous year, and the balance sheet of the current year is compared with the balance sheet of the previous year. This analysis is vertical. So friends, here right now if you can see, there is same as comparative statement. That means the profit and loss statement, the figures of previous year are compared with the current year. Here also in common size statement also, the profit or that statement of profit and loss accounts items are compared with the previous year, means current year items are compared with the previous year. But the change is what? Let us see. The process of comparison is different, which is here. Under this method, one base is used, 100 is considered as base. So what is the difference here? There in the profit and in the comparative method, we used to find the difference between the data of two different years. But here what we have to do, we have to give a base, and that base is considered as 100. Now in profit and loss statement, net sales is the base for profit and loss statement. The main objective of every business unit is to earn maximum profit. The enhancement of profit is based on maximum sales and minimum cost. For generation of sales, expenses are incurred. What is the proportion for each expense of sales can be availed from this analysis. Under this method, the statement of 2 years are used, therefore it can be ascertained whether the proportion of expense against sales has increased or reduced or remain stable. Necessary causes are identified if the proportion of expenses is increased against the sales, and necessary actions are taken so that the objective of maximization of profit can be achieved. Sales equals to 100% is used for the profit and loss statement of every year. Here percentage of all the item of profit and loss statement with the sales are determined. For example, suppose during the year 2016 sales is 20 lakh and purchase is 4 lakh, and the expenses are purchase is 8 lakh and expenses are 4 lakh. Here the percentage of purchase and other expenses with sales will be 40% and 20%. Purchase percentage of sales is or with sales is 40%. 8 lakh is the purchase and 20 lakh is the sales. So 8 upon 20 into 100 and you get 40%. So in 2016 40% is the sales, is the purchase based on the sales. We talk about expenses are 4 lakh, which is a 20% of sales. And if we assume that in 2017 the sales is 18 lakh, there where the purchase and other expenses are 6 lakh and 3 lakh respectively, and we find these percentage, the percentage of purchase it will be 33.13%. That is what 6 lakh upon 18 lakh into 100. And we talk about expense, then it is 16.67%. that is what 3 upon 18, that is 3 lakh upon 18 lakh into 100. So we can, if we compare these 2 years, we assume that these 2 years data are of the same company, then we can see the total sales has decreased from 20 lakhs to 18 lakh. So there's a decrease of 10%. And if we talk about the other things, then here expenses have decreased. What expenses, earlier it was 40, purchase earlier it was 40%, this time it is 33.13%, 33.33%. Earlier the expenses were 20%, now the expenses are 16.67%. that means there is a decrease in both expenses and purchase. So simply, base is given to the sales, and which is considered as 100, and based on that other expenses, revenue and purchase are calculated in percentage, and the analysis is done. In case of balance sheet, as a base, the total of balance sheet is considered. So when we do the analysis of profit and loss statement, the base is considered sales, and when we do the analysis of balance sheet, the base is considered total of balance sheet. This total assumed 100%. The total of balance sheet of every year has the base of 100%. For example, total of the asset side is of 2016 is 50 lakh, and total of 15 lakh, and the percentage respectively 70 and 30%. It will be, suppose the total of asset side of 2016 is 50 lakh, where non-current assets are 35 lakh and current assets are 15 lakh. So the percentage will be 70% and 30%. If the total of 2017 is 55 lakh, then non-current assets are 35 lakh and current assets are 20 lakh, then the percentage will be 33.36% for current asset and 63.64% for the non-current asset. So this way it is calculated. We will learn more about it in a practical sums when we will be doing some number 11, 12, 13, 14. Let us talk about the structure of common size statement. This statement also has 6 columns like This statement also has 6 columns like comparative statement. In the first column, the information of different components of profit and loss statement and balance sheet are disclosed, and in the third and fourth column disclose the amount of expenses, revenue, liability, asset of the previous and the current year. In the fifth and sixth column of profit and loss statement, the percentage of revenue, expenses of 2 years are calculated and disclosed. In the same manner, in the case of balance sheet, the percentage of assets and liabilities of 2 years are calculated and disclosed. The difference between these two percentages of 2 years are used for the analysis and interpretation. Okay, so and the formula for profit and loss statement: amount of expenses or revenue divided by amount of sales into 100, and for balance sheet, amount of liability or asset divided by total of balance sheet into 100. Common size statement of profit and loss statement. The structure for this is given below. All details of profit and loss statements are disclosed in it. The amount of 2 years are disclosed, and comparison is feasible if information of 2 or more than 2 years is available. Otherwise, we won't be able to do this. As stated earlier, the percentage of every revenue and expenses to sales are calculated and disclosed. Here the proportion is determined in the vertical form, that is why it is also known as vertical analysis. Let us see the specimen. See friend, this is the specimen. In the first column the particulars comes, second column note number, and third and fourth column as usual the figures of previous year and current year. And then fifth and sixth column are percentage of previous year and percentage of current year, which is based on the sales. So say for example other income, you want to find the percentage, then your formula will be other income upon sales into 100. If you want to find cost of goods sold percentage, then cost of goods sold upon sales into 100, and this way the calculation is done and amounts are calculated. So friend, this was all about the common size statement. We will learn about this in detail in practical sums in next lecture. Thank you.